in business, there's only 3 ways to grow your sales. Okay, so now you're able to see all this, and now you're able to analyze your business better. And you could even do this on your phone between classes.
Hello and welcome to my channel. I'm Anita Horry, second generation Pilates master and teacher trainer, Pilates business coach. And today's video, I'm super excited to be talking Pilates business finances. Here with me is Erik Kugler, CPA from the US, and the owner and the founder of Scale It Financial. Hello, Erik. Welcome to our channel. Thank you so much for being here.
Hey, thank you, Anita. It's great to be here.
The idea here is for us to help out the newer Pilates business owners or those Pilates teachers who want to open up a new business. And, they're completely overwhelmed because they have no idea where to start from. They want to open up a business to get freedom. They want freedom. They don't want to be tied to working to any Pilates studio. They want to be their own boss. And they want to run things their own way. But what they're lacking is organization, is skills to be able to run their business. And the financial aspect is very commonly overlooked. And this is why I felt this is so important to give them this information, and they'll be able to help them in their process.
Yes, definitely a good idea to have your goals of what you want to make. So maybe you need to do more sales, maybe you need to spend less money. But if you can't figure that out before you start, and it needs to make sense. Like you can't have super high sales right from the start if you don't have a super clever marketing plan. So it has to be doable. So you need to, again, look at your class size, look at the revenue per square foot, and figure out what's doable, and then work that down and make sure that everything adds up to the salary that people want. But knowing it in the early months, unless you got a lot of money to invest in marketing right off the bat, and you got something unique and you really hit upon something, then your earlier months you're going to get paid less.
And it's so crucial to be directed into the right path right when you're in it, not after the events have happened, not after your transactions have happened and you're deep down in the dumps because your business hasn't been doing well. It's much better to be guided by somebody who knows what they're doing, and to be able to help you just move your trajectory to a better path that's going to make your business more profitable.
Yeah, so after 25 years of being a CFO, I finally figured out like how I can provide the most value. And I'm learning every month, I'm learning something new about how the CFO can be more impactful. And now we're doing some really big things with some of my clients. That brings us into our next topic of conversation, which are KPIs. So can you tell us what a KPI is?
Key performance indicator.
Exactly. So what do you know about key performance indicators?
So these are measurement tools for your performance in your business. And KPIs could be anything from how many new clients you've acquired in the month, how many clients left you, what was the last sale for that particular client, and the percentage of clients that have renewed their membership. And that's from a business point of view, and maybe the income per square foot of your business. But there's lots and lots more financial KPIs that I'm sure you'll be able to tell us about.
Yeah, awesome. So you obviously have a really good grip on this, being who you are and having done what you've done, and also that you have an accounting background. So here's the thing. If you hire an accounting firm and they just present you with financial statements, what's going to happen is this: in 95% of the cases, they're going to hand you your profit and loss and your balance sheet, and you're going to look at the profit and loss for the last month, and you're going to say, okay, hold on, is that expense really that much? And you're going to look and say, yeah, it was. Or sales really that much? I thought we did more. And you're going to look and you're going to see, no, it's accurate. And then you get down to the bottom line, and maybe you're happy, maybe you're not, and you're just going to say, okay, well, this is a report. This tells me what it is. I guess it is what it is. Let's go back to work, right? And then more advanced accountants will show you the so that's like looking at a snapshot. It's like somebody just took a picture of your business, and that's what it is. Okay, so then more advanced accounting firms will show you like 3 columns, like for the last 3 months, and you can see over time how things are improving or not improving, like your sales or your expense lines. And you can look at that also, and a lot of people's eyes start to glaze over when they see this page full of numbers. And you can pick your way through it, and if you're able to concentrate and focus, you can kind of see what's happened for the past 3 months. Any more than that, it's like hard to really read it because there's seasonality involved. There's so many different factors that cause business owners to rationalize the results. So say, well, there's only 28 days in February, or January, it rained a lot more than previous years, or it rained more than it did in March. So that's why my numbers are lower and I can't do anything about expenses. They are what they are. I'm there every day. I can see what needs to be spent. And so that leaves you also sort of frustrated because you're hoping to get something out of this. So what we do is we create KPIs. And KPIs can be done several ways, and it's an answer to making this information more accessible. And the traditional way to do KPIs is on a big spreadsheet where you have all the things that you track, and then you see each month what it was. So my innovation to that was I started tracking, I did this for the bicycle industry, and it became the KPIs that everybody follows now. I started tracking the 12 trailing months. And what that does is it takes out the seasonality, because in every 12-month period, I don't care if it's in the middle of the year, the start of the year, 3/4 of the way through the year, the trailing 12 months are all going to have a rainy January, and they're all going to have a February with 28 or 29 days. So it takes out the seasonality. But then again, you're looking at a big spreadsheet and you're looking at these KPIs, and you're trying to spot a trending just with your eyes looking at rows on a big sheet. And that's kind of tough too, because you don't see what else comes into play. So what we've done is we've made that, we basically used that spreadsheet as a base and then created graphs that show trending. So you can see if the line's going up or it's going down, or if it leveled off, or you just get a general sense of how things are tracking for you. Okay, so now you're able to see all this, and now you're able to analyze your business better. And you could even do this on your phone between classes. So then, like, well, what do you track? So in business, there's only 3 ways to grow your sales. Like from an accounting perspective, I don't care what perspective, because accounting comes down to dollars and cents. And we're talking about dollars and cents growth in sales, and there's only 3 ways. So the first way is get more new customers, right? If you bring more new customers into the mix, you get more income. Second way, and you touched upon this in your analysis of what is a KPI, repeat customers. How frequently do people come back in? And then the third one is the average transaction value. Each time they come in, how much is spent on the average? So those are the only 3 ways to grow your sales, and you need to track these if you want to be successful in business. So that's the power of KPIs. So you may see that that your average transaction value is $25, whereas in the industry, other people you talk with are getting $32, $33. So if you're profitable and your average transaction value is 25, well, how much profit would you have if you could just bump that up to 26? Is there one thing you could do, or a couple things you could do to bump that average up $1, like less than 5%? And if you can, that all adds to the bottom line, and that's more that you can invest in your business with that money if you want to do that, or more that you get to take out for yourself. So say your average transaction value, you've worked and worked and worked at it, and it's where the market will bear. You've put your prices at a level where people can afford and will pay consistently. Not so much that that you don't have as many spaces filled as you'd want to have filled, and not so low that you've got a line out the door for people wanting to take your classes. Where I see too much demand, it means your prices aren't high enough. So then the second thing is, okay, well, how frequently are people coming back in once they're there? Is it a once and done kind of thing? Or are they coming back and then you start asking yourself, what's one thing I could do to get people to come back just a little more frequently, like 5% more frequently? And there's something you can do that would average that increase for you. Then the third thing is, how do we bring in more customers? And you've already got a customer base, and referrals are the best way for businesses to get new clients these days, new personal referrals. So you can figure out something there, how to get more customers without spending a lot of money. So it's easy to spend a lot of money in bring in new customers. Like you can give huge discounts and people will flock to you and you advertise that, but try to be more clever about it.
Yeah, I always say you need to look after your current clients because they're going to be your ambassadors and they're going to generate more income for you. So it's crucial if you want that repeat business, the repeat sales, new clients coming in, look after what you've got now and just make sure you just nurture them and make sure you give them the most value that they can get so that they will generate more business for you.
That's right. And there's an essay out there about that in the tech world. It's called 1,000 True Fans. So
yeah.
Look that up. The point of the essay is that in software, if you can get 1,000 raving fans, that's enough to get you to escape velocity, which is what we all want. Escape velocity in terms of income. So definitely look that up and read that article.
Brilliant. Erik, thank you so much. That's been so much valuable information. And I hope that you guys have found this really useful, really helpful. And if you want to work with Erik, look him up on scaleitfinancial.com. We're going to be sending all the information down below. And we're going to be also sending you the email address in case you want to contact the company via email. Erik, I don't know if we can put a phone number in there.
Yeah, absolutely. I'll forward you my information, my office number. Any budgeting needs, forecasting, accounting, outsource CFO services, and also funding.
Perfect. Erik, thank you so much.
Thank you, Anita.
Guys, thank you for watching. And if you liked the video, please hit the like and subscribe. Until our next video, goodbye.